If you think you need a lot of money to start investing, you're wasting time and opportunities. With just $100, you can take the first step toward building solid wealth without taking big risks. But most people never start because they believe small amounts don't make a difference. What separates those who grow financially from those who stay stagnant is strategy. And today, I'm going to show you exactly how to turn that $100 into the beginning of your financial freedom. Have you ever wondered how some people manage to multiply their money while others remain stuck in the same financial cycle? The secret lies in mindset and strategy. In this video, I'll show you a practical and realistic plan for investing, even if you've never done it before. By the end, you'll know exactly where to put your money so it grows consistently and safely. So stay until the end because this information could change your financial future. And don't forget to like this video and subscribe to the channel because I'm going to share a practical plan that can transform your financial life. Are you ready for this journey? Many people make a mistake that prevents any financial progress, waiting until they have a lot of money to start investing. But while they wait, they miss out on one of the biggest advantages of the market: time. Invested money grows exponentially. And the sooner you start, the more time your capital has to multiply. To prove this, let's do a quick calculation. If you invest just $100 today and continue investing this amount every month in assets that generate an average of 10% per year in 20 years, you'll have over $75,000. Sounds unbelievable, right? But that's the reality of compound interest. And if you want to take advantage of this, subscribe to the channel now because I always bring practical strategies for those who want to grow financially. Now, let's get straight to the point. Where should you invest those $100 so they really start working for you? The first option is ETFs, which are funds that replicate the performance of major market indexes. Instead of buying a single stock, you invest in several companies at once, reducing risks and increasing your chances of long-term growth. A classic example is the S&P 500, which represents the 500 largest companies in the United States. By investing in an ETF that tracks this index, you'll be putting your money into companies like Apple, Microsoft, Amazon, and Google. And the best part? You can start with very little. If this makes sense to you, comment below. I want to invest with little. Another interesting strategy is fractional shares. Not everyone knows this, but you don't need to buy a whole share of a big company. Today, brokerage firms allow you to buy just a fraction of a share, making investing accessible even for those with little capital. This means that with just $100, you can become a shareholder in one of the most profitable companies in the world. And if you haven't liked this video yet, now is the time. This really helps the channel grow and brings you more valuable content. Now, a fatal mistake many people make when investing small amounts: wanting quick results and betting everything on high-risk assets. The financial market is a game of patience, and consistency always beats haste. Invest wisely, diversify your assets, and have a solid plan. To help you, here's a challenge. Decide today which of these investments makes the most sense for you and take the first step. Then, come back here and comment on your choice. Many people believe that only those who already have money can invest and grow their wealth. But the truth is that the world's greatest investors started with small amounts. The first step is changing your mindset. Instead of thinking that $100 won't make a difference, understand that what matters most is a habit and consistency. Money invested strategically grows over time, and the sooner you start, the better. Plus, understanding that investing is a marathon and not a sprint will help you avoid frustration and impulsive decisions. If you still have doubts about starting with little money, think about the effect of compound interest. It works like a snowball. By reinvesting your earnings, your amount grows exponentially over time. Let's look at a practical example. If you invest $100 per month with an average return of 10% per year, in 30 years, you'll have over $197,000. This happens because interest compounds on itself. The earlier you start, the greater your wealth will be in the future. What seems like a small effort today can guarantee your financial independence in the long run. Now that we understand the importance of mindset and compound interest, let's talk about where to put this money. One of the best options for beginners is ETFs, exchange-traded funds, which are investment funds that track market indexes. They allow you to invest in multiple companies at once, reducing risk. A popular example is the S&P 500 ETF, which includes the 500 largest companies in the United States. With just $100, you can become a shareholder in giants like Apple, Google, and Microsoft. Diversification is one of the most important rules for any investor. Even with just $100, you can spread your investments to minimize risk. In addition to ETFs, also consider fractional shares, real estate funds, and even cryptocurrencies if that interests you. The key is not putting all your money into a single asset. If one investment doesn't perform well, another can balance out the losses. This way, you protect your wealth and increase your chances of long-term growth. Many beginners make mistakes that can jeopardize their investments. The first is chasing quick profits. In the financial market, promises of easy money almost always lead to losses. Another common mistake is not diversifying, betting everything on a single stock or cryptocurrency. Additionally, investing without knowledge can be risky. Before putting money into any asset, research, study, and understand how it works. Patience and discipline are more important than trying to find the next big opportunity. Choosing a reliable brokerage is essential for a beginner investor. Some brokerages offer fee exemptions for small investments, while others have more intuitive and educational platforms. Check if the brokerage is regulated, what fees are charged, and whether there are accessible investment options for your profile. Additionally, a good brokerage provides educational materials that help you make better decisions. It's no use investing $100 once and expecting great results. The secret lies in consistency. Creating a monthly investment plan helps maintain focus and discipline. Set an amount you can invest every month, even if it's small. Additionally, set goals and track your results over time. Small, regular contributions can yield great returns in the future. Real estate investment trust REITs are an excellent option for those who want to invest and receive periodic income. With just $100, you can become an investor in the real estate sector without having to buy a physical property. REITs pay dividends regularly, providing a source of passive income. Moreover, they offer liquidity and diversification as they invest in various types of properties, such as shopping malls, offices, and logistics warehouses. An essential strategy to accelerate your wealth growth is to reinvest all earnings and dividends. If you receive a dividend from a REIT or a stock, instead of withdrawing that money, use it to buy more assets. This increases the effect of compound interest and makes your money work for you exponentially. Small reinvestments can generate great results in the long run. The financial market is volatile, and it's normal for investments to fluctuate over time. Many beginner investors panic when they see declines and end up selling their assets at the worst moment. The key is to have patience and maintain a long-term vision. The market goes through cycles, and those who stay invested tend to reap good results in the future. As you gain more knowledge and confidence, you can expand your investments into new asset classes, such as fixed income, cryptocurrencies, international stocks, and even your own businesses. The important thing is to always study before making any decisions. Investing in knowledge is just as important as investing money. Reading books, watching educational videos, and following the market are habits that can transform your relationship with money. The more you learn, the better prepared you will be to make sound financial decisions. Setting clear and realistic goals helps maintain focus and discipline. Establish short dash, medium dash, and long-term goals. Do you want to reach $10,000 in investments? $50,000? $100,000? Everything starts with a plan and disciplined execution. Regularly tracking your investments is essential. This doesn't mean checking the market every day, but rather reviewing your strategy periodically and making adjustments when necessary. Sarah Thompson was just 22 years old and had a dream, achieving financial freedom. Newly graduated in business administration and full of doubts about her future, she could barely pay her bills while working as a barista in a Seattle cafe. Everything changed when she decided to take the last $100 from her bank account and invest it strategically. Inspired by stories of successful investors, she spent nights studying the financial market and looking for ways to grow her capital. Instead of following the traditional path of conservative investments, Sarah decided to take a risk and put her $100 into buying a small number of shares in a rising tech startup. Her strategy was simple. Watch the market, study financial reports, and invest in innovative companies with exponential growth potential. With just a few weeks of analysis and patience, her bet began to pay off. After 6 months, her initial investment had doubled. But Sarah didn't want to cash out the profit. Instead, she reinvested everything in a growth fund focused on artificial intelligence startups. During this time, she continued working, saving, and learning about portfolio diversification. Her big breakthrough came when one of the companies she had invested in was acquired by a giant in the sector, and her shares appreciated by over 500% in just a few days. With considerable capital now in hand, Sarah realized it was time to diversify. She started investing in real estate, buying her first apartment in a promising neighborhood, using her earnings as a down payment. At the same time, she created a YouTube channel to share her experiences and attracted thousands of followers interested in learning about finance and investments. Her content generated a new source of passive income through advertising and partnerships. With her well-defined strategy, Sarah multiplied her capital by investing in cryptocurrencies, promising startups and real estate funds. By the age of 30, she already had a millionaire net worth and was helping other women achieve financial independence. Her story went viral on social media, inspiring millions of people worldwide. She became a best-selling author on investments and a speaker at international events. Today, at 35, Sarah Thompson owns a financial empire valued at tens of millions of dollars. Her portfolio includes tech companies, luxury real estate, and disruptive startups. But for her, the greatest achievement is not the money. It's the impact she has had on so many people's lives. Sarah founded a nonprofit organization to teach financial education to underprivileged youth and continues to inspire people to believe that, with knowledge and strategy, anyone can turn $100 into a millionaire future. To wrap up, I'll give you a simple and effective action plan. First, open an account with a reliable brokerage. Second, choose an asset to invest in, whether it's an ETF, fractional stocks, or real estate funds. Third, set a monthly investment amount, even if it's small. The key is to build a habit. And fourth, be patient. Great investors build fortunes with a long-term mindset. If you enjoyed this content, subscribe to the channel now and turn on notifications so you don't miss the next tips. Your financial freedom starts today. See you in the next video.